Chapter 6 is about understanding taxes. Most of you who have worked will have a general knowledge of most of what we will cover in this chapter. But keep in mind that rules and the laws constantly are changing, and each year your taxes may be calculated a little differently, so you want to pay attention to any changes that might occur. So what you'll learn in this chapter are about the obligations and responsibilities for paying your taxes, some of the tax reporting components, how to electronically tax return preparation and transmission, and of course consequences of not paying your taxes. The big picture of this chapter is that having to file personal taxes is another sign of adulthood and an important part of becoming financially literate. Chapter 6 identifies your obligations and responsibilities as a taxpayer, tax reporting components, electronic tax return preparation and transmission, and the consequences of not paying taxes. It is very important that you understand those consequences because they could include going to jail. This slide just describes the obligations and responsibilities, where it came from, a little bit of the history of paying taxes. It does tell you that most federal revenue comes from income taxes, and we know that that federal revenue is needed for many things in our United States. The state and local revenue comes from your transaction taxes, such as sales tax and income taxes and property taxes for those that own homes and businesses that own. This slide goes into more detail. You should study it to learn a little bit more about those components that I just mentioned. It gives you the definition and some examples and what the revenue is supporting. Payroll taxes are very important because you should be able to calculate those so that you can check to see that they have done those correctly each time that you are paid. Payroll taxes, they do take out Social Security tax. This is to pay for benefits for retired workers and their dependents, and some disabled workers and their dependents. And then there's also a Medicare tax that pays for medical benefits after the age of 65. The federal income tax is used to provide for national programs such as defense, community development, law enforcement, foreign affairs, and interest on the national debt. And that's not the only thing, so those are just a few things they're mentioning. It is shown on the Form W-4 Employees Withholding Allowance Certificate. Here's an example of a New York State payroll, what it looked like to begin with, and including their overtime and their total gross pay. That means before taxes. Then it shows the Federal Insurance Contribution Act tax, which is the same as your Social Security tax, your Medicare tax, the federal tax that was taken out. They also have a New York State tax, just like Mexico does, and they also have a New York City tax, a disability tax, and a long-term disability. So, or those aren't taxes, but they have a few more than some other states would have. And here's an example of one in Wisconsin and one in Indiana. And you should study those because it depends on your state as to what you will have to file. So, for instance, I teach in New Mexico, but I live in Texas. Texas does not have a state tax, but I do have to file income in New Mexico and pay that state tax for what I've earned in New Mexico. Your wage and tax income is shown on Form W-2. You should get that in the mail by January 31st, and it contains the following information for the previous year: your salary, wages, because sometimes wages may be different. You may get wages and salary, commission, bonus, and any tip income. Interest income is also subject to tax. So if you've made any interest off of any of your CDs or any savings account, then you would get a Form 1099 for interest income, and that should be reported. Your filing status determines the rate at which income is taxed, whether you're single, married filing jointly, married filing separately. I have calculated ours for years on married filing jointly and separately, and it's always come to our advantage to file jointly as head of household and a qualifying widower with dependent children. Tax exemption is the amount taxpayers can claim for themselves, their spouses, and any eligible dependents. It does go by Social Security number, because at one time we had many people listing dependents that were not actually people that were alive, and it was just made up things. So they do go by Social Security numbers so that they can check those carefully now. So any qualifying child or qualifying relative that you have had living under your household for the year and paid the majority of their expenses could qualify as a dependent, and therefore an exemption. Here's some examples of dependency exemptions and what would qualify them. Those are unusual. Some of those are unusual circumstances. We also have a standard deduction that reduces the income subject to tax. So you have both your exemptions plus you have your standard deduction. For most taxpayers, the standard deduction is based on filing status, and there's a chart showing you what that deduction would be. That does change from year to year, not every year, but some years it may be higher than others. It has gone up progressively over the years. Tax credits are dollar for dollar reductions. For instance, child tax credit, if you have child care, this is a real advantage in the fact that it is a dollar for dollar. So it's better than for you just estimating or taking something off as a deduction. It's much better if it's a credit. So child and dependent care expenses, education credits, some of those, such as the American Opportunity Act and the Lifetime Learning Credit, will allow you to deduct those as credits, and earned income credit. Most everyone does electronic tax returns now, and depending on how you're doing it, it could be free, and so it is an advantage because we do have increased accuracy. It's easy to use, and you can prepare your federal and state at the same time, and it does give you your return back faster, especially if you're getting money back. And there's some more examples, such as direct deposit. It's also an advantage. There are consequences of not paying taxes. Tax evasion, that means you deliberately and willfully hid the income, falsely claiming deductions, cheating the government out of what it is owed, such as not paying your taxes at all. It is illegal. There are consequences such as penalties, fines, interest charges, and possible jail sentence. I happen to know of a dentist that was charged with tax evasion and spent 5 years in prison for that. So it is important that you realize as an adult the importance of you filing taxes every year. This is just a brief overview. Be sure you read the chapter for more specifics on taxes, an important part of managing your money. End of video.